Tonight, the Association of Ghana Industries calls for an aggressive industrial plan for local agribusiness and manufacturing companies to avert a looming economic recession.
Prospects for companies in the agribusiness and agro-processing sectors are huge. Investment in these sectors seems to have stalled due to policy inconsistencies over the period. It is important to bring all stakeholders, including the GIPC, in order to have a balanced discussion on the investment climate in Ghana.
A leading investment promotion expert with the EU reveals that Ghana is currently $6 billion short of investment funding this year.
Ghana, like Africa, faces a substantial investment gap. The critical question, therefore, is how to fill it.
And ECG goes tough on state institutions as it runs into acute losses.
ECG is under a different person now. Revenue mobilization is key.
We have more on her story and other business stories coming shortly. To stay with us. Good evening. Tonight, the Association of Ghana Industries has called for an aggressive industrial plan for local agribusiness and manufacturing companies to avert a looming recession. It comes as Finance Minister Ken Ofori-Atta in the mid-year budget reviewed presentation revised downwards Ghana's economic growth by 2.7%. Speaking at the launch of the AGI Industrial Summit, President of the AGI, Dr. Humphrey Eyim Dake, warned that things could get worse in the coming months if an exclusive local content policy is not produced by government.
Our businesses are in trying times. The fast depreciation of the cedi, the escalating fuel prices, the rising public debt, the rising inflation are of great concern to businesses in general and industries in particular. We are indeed in challenging times, and we would like to engage government to prefer pragmatic solutions to the economy. Our strong recommendation is that in engaging the IMF, we should pay maximum attention to the industrial and agriculture sectors of our economy to hasten the recovery of our economy on a more sustainable basis with the mindset of a structural transformation of our economy. Part of the reasons we are struggling with our economy today could be attributed to our heavy dependence on imports, and therefore supporting our productive sectors to provide our essential needs. It's imperative for local and export markets. We call for the full restoration of the benchmark discount values to its original levels, whilst providing incentives to encourage local manufacturing within the context of industrializing our economy. On the mid-year budget review, the effort to restore the macroeconomic stability is the most welcome, and we need to engage more on ways to bring relief to businesses in these challenging times.
We stay a bit with the AGI because there are indications of government struggling to secure investor funding for various infrastructure projects, as a leading investment promotion expert with the EU has revealed that Ghana is currently $6 billion short of investment funding for this year. Take a listen to Sean M. Dugan, an investment and promotion expert with the European Union Ghana Employment Specialization Program, who also spoke during the AGI session.
Ghana, like Africa, faces a substantial investment gap. The critical question, therefore, is how to fill it. According to Global Infrastructure Outlook estimates, Ghana, to achieve its sustainable development goals, will need more than $11 billion worth of investment a year, every year, for the next 15 years. The current level of investment funding available for Ghana's sustainable development goals suggests a funding gap of about $6 billion a year. How do you fill that gap? We have worked with AGI to try and answer that question through the form of an investment summit. This will be the focus of the second day of the Ghana Industrial Summit and Exposition. We will use with AGI the Industrial Summit to discuss how to improve Ghana's investment funding ecosystem with the objective of filling that investment gap. Specifically, the Industrial and Investment Summit will focus discussions on mobilizing, attracting and retaining investment, the sort of investment that's necessary for industry to take full advantage of the African single market.
Well, in all of this, Ghana's business community continues to reel in despair over the high cost of doing business amid a depreciating local currency and high inflation. There was a bit of respite when the finance minister announced the extension of the tax amnesty program, as it were, to give businesses more breathing space amid the current economic climate. But how worse are things getting? President of GUTA, Dr. Joseph Obeng, joins me to discuss. We're grateful, Doc, that you could join us. First of all, help us with GUTA's response to the finance minister's presentation yesterday. Did it actually meet the expectation of Ghana's trading community?
Well, we still have to contend with inflation, and that's the bane of businesses. That's the problem that we are facing. The problems of the exchange rate still hangs on us. There's no stability in sight for the currency, and the dollar keep on going. And we are heading also for Christmas. It means that when the demand for imported goods goes up, we are going to also face even higher exchange rate. So that's the difficulty ahead, and we do not have any firm distant arrangement to curtail or to contain the inflation and also the stability of the currency, and that's what we have to contend with at the moment. With regards to the benchmark values that the AGI was seeking the reversal, government did not heed to it, and that one has given us some respite. And then we're also waiting for the government to bring some uniformity in the tax collection. As we have been telling you, there are three forms of tax collection, VAT collection in the market. Those paying the standard rate, the flat rate, and then those who are not charging the VAT at all. And that has been the problem of businesses. And so we are still waiting for government to respond in that regard.
You paint a very...
main issues.
Yeah, you paint a very gloomy picture regarding the forecast of inflation and its impact on the prices of goods and services, especially when Christmas will be approaching quite soon in the next few months. Where does this leave traders when it comes to pricing of goods and services on the market?
Yeah, you see, it does not help us when prices go up. As a matter of fact, when there's inflation, our consumers, their capacity to buy is limited because their purchasing power is reduced. And business thrives on turnover. The rate at which we sell the goods is what helps businesses. But the customer is also challenged. So they are not able to buy what they normally would have bought. And if your capital is a borrowed one, then you are in trouble. It means that you are not able to service your loan. And from now up to Christmas, this is what we have to contend with. And it's not interesting at all.
There could be some respite. There could be some respite. The finance minister has announced the extension of a tax amnesty for businesses. How much of a relief could this grant local industry in the short to medium term?
Yeah, the tax amnesty has been there for quite a long time. You see, we keep on extending it because education, there's lack of education that goes with it. And so most of the informal sector players do not know what this tax amnesty is. And I'm expecting that GRA come with us to go to the market and then bring their forms and all that. And they have to make a pragmatic effort to reach out to the informal sector who normally do not know this paperwork and even understand the amnesty itself. So the program is there, but people are not accessing it. That's why they keep extending it, because limited people or just a few people have gone to access it.
Dr. Obin, we're grateful for your analysis as always. He's president of the Ghana Union of Traders Association. Now, the International Monetary Fund is expressing worry about the expected slowdown of Ghana's growth rate. The fund's latest World Economic Outlook report also forecast a slowdown in economic growth across the globe. It therefore warns more challenging times for emerging economies going forward. The chief economist at the IMF, Pierre Olivier, explained that the tightening of policy rates by central banks in the US and other developed economies will have a negative impact on emerging markets like Ghana.
About the downside risk that we're facing in the coming month and year, the financial tightening, which has been relatively orderly in its impact on especially emerging market economies up until now. There's been a lot of differentiation. Spreads have been going up. Interest rates at which countries borrow have been going up. Currencies have been depreciating. But there's still a lot of market differentiation between, for instance, commodity exporters versus commodity importers. Going forward, however, it's very clear that the tightening in the by the major central banks is going to have continued effects on the rest of the world. And we can think about basically three channels. First, there is going to be reduced demand and economic activity at the global level. That's going to weigh down on countries that rely a lot on the export sector for their growth. That's going to affect them through this channel. The tightening in the U.S. and other central banks around the world is also leading to a major appreciation of the US dollar against emerging market currencies, and that is increasing inflation pressures in those countries. So these countries are facing higher inflation numbers because there is imported inflation. All the price of the imported goods are rising faster because they are expressed in dollars. And then there is just the fact that when we have a cycle like this, there is in general what we call a flight to safety. There is a general tendency by investors to maybe move away from emerging market economies and seek safe havens, invest in U.S. treasuries or in other safe assets around the world. We've seen the capital flows moving out of emerging markets in the last 4 or 5 months. It's been quite persistent. There's been a lot of capital outflow. As I said, it's been quite orderly until now, but it's adding pressure on domestic and sovereign rates, and that's reducing fiscal space. That's also making it harder for the private sector to also finance itself. So all of these things are going to weigh down on emerging market economies, which so far have been, as I've said, has been quite orderly. A number of emerging market economies have improved their policy frameworks, the way they implement monetary policy, the way they deploy other instruments, macroprudential instruments, to guarantee the stability of their financial sector. So things have not been too disorderly up until now. But of course, we are concerned as to whether this might continue in the future.
Let's now talk electricity, because the managing director of the electricity company of Ghana, Samuel Dubik Mahama, says ECG revenue losses is running into millions of dollars, and the company is going to ensure that any state institution owing is disconnected. According to him, the anticipated meter auditing will start from August this year, which everyone found culpable will be prosecuted. He announced this at a news conference in Accra.
Parliament has paid. To be fair to Parliament, they've paid to the very last penny. Now, if you've realized, I took off Ghana Airport without fear or favor. I took off Tema Oil Refinery without fear or favor. GBC, I didn't spare. She's here, so you can verify. My brother, ECG is under a different person now. Revenue mobilization is key. We are at the point where we cannot be doing the same thing over and over again. Every state institution, thanks to the task force that has been set up, every state institution that owes, their doors have been knocked on and they've paid. Ghana Sports Authority, if you realize, last weekend I took them off before the football match in Cape Coast. They came to pay. I am not sparing anybody. I am not hiding behind any hardship. If you are going through hardship, imagine what I am also going through as ECG. I'm going through a bigger hardship because within my value chain, I buy the power in dollars and I sell in Ghana cedis. It's not sustainable for you to steal from me.
This is Business Live, still to come in the bulletin. Shika Fedua Aminin is not new to business, but she's trying something new, making spices. The Joy Business van heads to the production center of Easy Cuisine, where she makes a variety of spices. The details will be coming shortly after this break. Just stay with us. And that'll be it for Business Live. I'm Charles Ayitey. For more news, log on to myjoyonline.com. Many thanks for watching. Enjoy the rest of our programs.